What steps is the SEC taking, Steve?
Well, we knew this was coming because this was part of legislation that came in the waning days of the Trump administration in December of 2020, bipartisan support, by the way, to mandate that companies listed on the U.S. exchanges to open up its books for transparency if required to do so. Now, the SEC has had such a requirement dating back, I believe, to about 2002. And according to the SEC, almost all companies from all jurisdictions have complied for the last couple of decades, with the exception of companies from China and from Hong Kong. That's according to Gary Gensler in a statement, who is basically now fulfilling their obligation that was passed by Congress to come up with these new rules. How are they going to implement? What are going to be the criteria for companies that could be potentially put on a list for delisting? And that's what we're having now. So if these companies do not comply, they could potentially be delisted within 3 years. You're seeing what Gary Gensler here is basically saying. It's saying all companies need to be subject to inspection by the Public Company Accounting Oversight Board. Change the page, and this is the million-dollar quote, which basically singles out China and Hong Kong as not necessarily complying with that requirement, which is now going to be mandated by law.
Steve, we spoke to Michael Every earlier, and he said if you take a look at the US moving to delist Chinese firms, China trying to, close loopholes to get their firms to come home. It's a matter of who gets there first, right? The end goal seems to be the same. Is the end result just going to be further bifurcation of these two economies and these two superpowers?
Yeah, the headwinds are definitely against these companies that are listed in the United States, whether it's coming from regulatory pressure in China and by efforts by the CSRC, the securities regulator in China. The story yesterday, of course, that they're going to start banning, which they've denied. They've denied this, that they're going to ban the use of VIE structures for Chinese listed companies in places like the United States. Now, that doesn't necessarily mean a delisting, but that could mean either a dramatic reshaping of the shareholding structure of those companies, or possible delisting. And then again, where do they go from there? Could they be rehomed back here in Hong Kong? That is a possibility. So you're either getting pressure from the Chinese regulators or the U.S. regulators and the SEC for these companies. And that's why, the Golden Dragon Index, as you can see right here on your screen, has not kept pace. It's gone in the opposite direction of the overall NASDAQ Composite Index this year. That pressure on companies like Alibaba. Alibaba has had so many headwinds given the antitrust probes, this kind of pressure on the VIE structure, which of course it has through the Cayman Islands, and also of course the pressure from the SEC. It has lost more than $500 billion in the last year. That is more market value than the entire market capitalization of JP Morgan. Puts it into perspective.